Financial versus Schwab. Do we compete? What are our differences? How do we stay in business? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's AdBits, I'm going to explain because I get this question so many times. Clients, even family members and friends said, hey, what exactly do you do that Schwab doesn't? Why are you in business? How are you in business? How is Schwab or Fidelity or Vanguard not just taking you out? What's going on here? So wanted to do this podcast because it's important to really understand that there are different types of IRA custodians, IRA companies, and different types of IRA options. And that's great, right? When IRAs were created all the way back in 1974, about 50 years ago, the tax code, IRS, did not distinguish between IRAs that invested in stocks, publicly traded securities, and IRAs that did alternatives, okay? The IRS and the tax code is very clear about only three things that an IRA cannot do. The tax code doesn't explain or distinguish or underline what IRAs can do because it's impossible to have a complete list of all potential investments, especially investments that will get designed by technology like cryptos or other types of investments that did not exist back in 1974. So IRS is smart, Congress is smart to say, okay, let's just worry about what you can't do, things that we don't want IRA owners to do. All the other stuff, I guess, we'll be okay with. And if not, we can design legislation around it. So it's just three simple things. Number one is life insurance. Number two is collectibles like art. There is an exemption for precious metals, gold, silver, palladium, American Eagle state minted bullion coins, but they must be held in the physical possession of a U.S. trustee, like a U.S. custodian. And then third, in the broadest subject, broadest category of prohibited transactions, which I've done, I don't know, hundreds and hundreds and hundreds of videos and blogs, podcasts on, is the 4975 prohibited transaction rules, which in a nutshell is simple to comprehend because it basically is this. The IRS does not want you to do anything with your IRA that in any way, directly or indirectly, personally benefits you individually, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such person. In sum, the IRS wants you to invest your IRA to exclusively 100% benefit your IRA, not to benefit you, to benefit your kids, benefit your parents, or to benefit any entities you control, right? Because they're saying, listen, if you're going to do something that will personally benefit you, fine, do it. But just pay tax on it, right? Or if it's a Roth IRA, just pull it out of your Roth IRA. Don't use your IRA to help yourself personally. That is a self-dealing or conflict of interest transaction we do not want you to do. Why? Because we want your IRA to grow for your future. It should be invested for the future, which is the intent of the IRA, and it shouldn't be invested to help you or your family today. Again, very fair rules. I totally understand. So what Schwab or Fidelity or Vanguard does is they make money allowing you to do publicly traded investments. Okay. And that's their business model. And they have every right to do that. They have a charter. IRA Financial is a charter. So under Section 408, only three types of institutions could administer IRAs: a bank, financial institution, or a state chartered trust company. And that charter could be as broad or limited as each company would like. In the case of IRA Financial, we don't sell products, right? We are a South Dakota regulated trust company. We're not in the investment business. We don't sell investments. We don't sell stocks. We don't sell investment advice. We're not regulated by SEC or FINRA because we don't do that. We don't charge commissions. We don't make money on investments. That's not our business. Schwab, Fidelity, Vanguard, they do. That's their business model. They make money when you buy their investments and if they give you investment advice. And they're 100% allowed to do that. God bless them. I have an account at Fidelity, probably have one at Schwab and Vanguard as well. Great companies. Nothing wrong with them. But they don't do what IRA Financial does. And we don't do what they do. And that's why IRA Financial complements a Schwab, a Vanguard, a Fidelity, etc. We don't want to get into their business. They do it better than we can do it. We don't want to be involved in selling stocks or selling ETFs or giving investment advice. We don't want that. We're good at what we do, and our industry is great at what we do. We custody alternative asset investments. All right. We believe in diversification. We believe allowing our clients to invest in what they know and trust is important, and something that's super, super paramount to helping people save and grow their retirement nest egg. So we don't think you can just buy publicly traded stocks or fixed income. We believe in diversification, that in order to have a well-rounded retirement portfolio, you should do both. So IRA Financial does not compete with Schwab, right? As I said, we don't sell stocks, we don't sell publicly traded securities, bonds, fixed income, ETFs, mutual funds. We don't give investment advice. We don't charge for that. We're totally neutral and agnostic to the investment. We're on your side, right? We want you to do well. We have flat fees, which makes IRA Financial very unique in the self-directed space. So we don't charge asset valuation fees. So as your IRA goes up in value, you're going to still pay us the same flat fee, which is important because if you look at the power of compound returns and the rule of 72, assuming an 8% rate of return, your money will double every 9 years. Okay. We're still going to charge you the same flat fee. We want our clients to increase the value. We don't want to pull any of those gains out for fees. We just try to keep our fees as baseline and bare as possible. We have no wire fees, no check fees, no transaction fees, no asset valuation fees. It's just a very one flat fee rate. So you can, in your head at least, calculate what the fees will be and know what your return, the impact it will have on your investment return, which I personally think is very important. So a lot of people say, well, why doesn't Schwab just get into the alternative asset business and just wipe all you guys out? Well, that's not their specialty, right? They focus on publicly traded securities. The publicly traded marketplace for IRAs is still the largest part of the investment world. It's estimated anywhere from 90 to 95% of all IRA investments are in traditional investments. So right now, the Schwabs, Fidelities, Vanguards are just focused on that big slice of the pie because it is that big. But they're having an issue because their fees are getting compressed by companies like Robinhood that are charging no commissions. So now they're moving to different fee models where they're trying to charge for investment advice, less on commissions, more on advice. And, God bless them for that. We think we're on the right side of the business because the alternative asset market is growing a lot faster than the traditional asset market. If you look at the number of publicly traded companies from today back to 1996, it's about half. So there's less options for people to invest in the public traded market. Not so with alts, right? We allow you to do anything that the tax code allows you to do. So anything other than life insurance, collectibles, or self-dealing, conflict of interest transactions, you can do it. Whether it's real estate, whether it's private business stock, whether it's investment funds, private equity, venture capital, hedge funds, real estate funds, hard money loans, credit funds, gold, cryptos, tax liens, tax deeds, you name it, you can do it, right? Private placements. There's almost an unlimited world of investments that you can do. And a lot of the institutions like Schwab, Fidelity, Vanguard, they're going to argue that they market, or at least claim they market, a self-directed IRA, but it's not really the case. I call their self-directed model a closed-end self-directed IRA because it's technically self-directed, meaning you can pick if you want to buy Google or Tesla stock or NVIDIA, but you're limited to what they offer you. So it's not really self-directed. It's basically closed-ended. A true self-directed account, what IRA Financial offers, allows you to do anything allowed by the code except life insurance, collectibles, and 4975 prohibited transactions. Otherwise, you can do it. So that is a true self-directed IRA. It's not a closed-ended fund. It's an open-ended it's an open-ended self-directed IRA. So that is the main difference between a self-directed IRA, you can get it Schwab, and a true self-directed IRA, you'll get it IRA Financial or some of the other great companies in the self-directed IRA space. So that was the main purpose of today's podcast, to say, yeah, Schwab is ultimately allowed to do what they do. They don't have to allow you to buy real estate in your IRA. They don't have to do that. They can limit or expand their charter to the extent they wish based off their business practices. We have IRA Financial is a different business model than Schwab or Fidelity. Vanguard, we don't make commissions or make money on investments. We don't sell investment advice. We're 100% agnostic and neutral to investments. We want our clients to succeed. grow their retirement accounts, give you the support, framework, and the advice you need to structure investments in the alternative asset world to become the most tax efficient possible. But the investments are your call. That's why it's a true self-directed. We're not going to tell you, hey, invest in fund A or buy real estate B or crypto C. No, that's on you. You're going to come to IRA Financial, set the structure up, use a flat fee model, take advantage of our annual tax compliance, tax consulting, tax reporting, tax filing service, so we can help you keep your self-directed IRA in full IRS compliance. And then you could do what you do best, which is focus on the investments, and let us do what we do best, which is custody, record keep, administer, and annually tax report and file any IRS relevant returns or information needed to keep your structure in compliance. So in sum, we work in conjunction with Schwab. We don't compete with them. We don't want to be in the traditional asset marketplace. We don't want to sell stocks or fixed income. We love being where we are. The alternative asset market's growing. If you look at where the alternative asset market is today, then when I started the company 15 years ago, it's a different world, right? 15 years ago, I remember telling people, hey, I'm starting a business that's going to let people buy real estate with their IRA. People thought I was crazy. It's like, why would people want to do that? Like, why wouldn't you just buy stocks? And now it's like, give me more, right? Give me more. I want more real estate. I want more private stock. I want more, gold or cryptos or investment funds, hedge funds, private equity, venture capital. I want more returns. I want more freedom. I want more control. I want more diversification. Schwab, Fidelity, Vanguard, they all offer me the same investments. I need more. I need a broadened investment portfolio. And that's something that is important to a lot more Americans today. Plus, the real reason is people have more instincts to understand that they want to invest in things they understand and they like, right? Warren Buffett, one of his 3 key investment principles is it's important to invest in what you understand. And some people just understand real estate. They get real estate more than why the S&P 500 is going up or down, or why Tesla is down 30% this month. Some of it's random. Like for example, Salesforce. A couple of weeks ago, Salesforce, their stock dropped 20% in one day. Salesforce is a great company. Okay. Why? They missed their revenue target by $40 million. We're talking about like billions and billions and billions of dollars in revenue on the quarter. They missed it by $40 million, which is like a tiny percentage. The stock dropped 20% in one day. That's crazy. The biggest drop ever for Salesforce because it missed its revenue target by $40 million, which is literally like, nothing compared to the billions and billions and billions in revenue it did in the quarter. But it makes no sense. But everyone dumped the stock. Whereas if you have a house, maybe you're charging $2,500 a month this year in rent, and maybe it's a tougher economy. Next year, you'll only be able to charge $2,200, or maybe it's a better economy, you'll charge $3,100. But you always can fill that house up. You get it. It makes you comfortable. You can drive by the house. You can see it. That's my investment. I get cash flow. I get asset appreciation. I know I can always rent it out. I have a great handyman that can fix everything up. I can sleep well at night. I don't have to worry that I turn on my phone and I see an alert that my stock just dropped 15% for no reason. So that's kind of what we do. I think it's important to diversify. I think I'm not here saying that you shouldn't have any stocks or only put all your money in real estate. No, that's not my job. That's your job. My job is to give you the best service, the best structure, most tax efficient analysis to allow you to customize a solution to allow you to do what you want in the alternative asset marketplace using your retirement in the most tax optimized way possible. And I think we do that better than anyone. And that's really why IRA Financial has been able to grow so dramatically over the last 15 years, and why the alternative asset marketplace keeps growing is because people like you understand the importance of freedom and control, which is what a true self-directed IRA does. It's the most American thing you can do, is take more control over your future, invest in things you like, and not just get forced into buying stuff that's being offered to you. Now, it's good to have a diversified complementary retirement portfolio, and that's why we are in business, and that's the service we offer, and that's how it complements the Schwab's, Fidelities. They don't do alts, they don't specialize it, they don't want to touch it, they're scared of it. We embrace it. We love it. We love giving our clients the freedom, and we have the expertise over the last 15 years to help you optimize your structure, do all your annual compliance service, all your tax filings, all your tax reporting, all your record keeping, so you can do what you do best, which is making good investments. So that's it for today's podcast. Hope you guys enjoy the podcast. If you have any questions, submit them. You can do them on the feed, whether you're listening to this wherever you listen to podcasts, or if you're watching this on our YouTube channel. You can also hit us up on social media, X, Facebook, or Meta, whatever it's called now, Instagram, LinkedIn, YouTube, or you can send us an email at info@IRA Financial and just say AdBits or Ask Adam, and you can just submit the question. I promise we will get you the answer. Appreciate your support. Thanks for hanging out with me today, and have an amazing rest of your day. Thanks.